This is Value Investing. I'm your host, Jun Kim. In this podcast, you'll learn everything related to value investing. Hey guys, thanks for joining the show. Welcome to another episode of the Value Investing Podcast. On today's show, I want to talk about this concept called alternative data for investing. You guys probably not familiar with this concept because if I remember correctly, a lot of you guys are retail investors listening to this podcast. But if you are a hedge fund manager or a quant manager, then this concept should be something you should definitely need to think about because this is probably one of the areas where you can get edge over retail investors. And for those of you who are retail investors, why not understand this concept? Because you want to know how other institutional investors are investing. So that's why I'm covering this topic. And the reason why I'm covering this topic right now is because I was invited to speak at this conference called AI for Finance. And I was talking about this topic related to how people can develop machine learning models for time series forecasting. And it was very well received, so I was happy about that. But I was also able to listen to a lot of other talks with respect to, how artificial intelligence, machine learning skill sets are used for investing purposes by various hedge fund managers and quant managers. And one of the topics that came up quite frequently is alternative data. So that's why I'm going to cover this one on today's show. I think it's going to be a very exciting show. And this is a new trend that actually has been rising over the last 5 years. And there's a lot of developments in this area. There's a lot of curiosity in this area. So let me just cover this topic. So before I get into the details, let me just give you a quick disclaimer, as always, that this podcast is for entertainment purposes only, and it is your responsibility to consult with your investment professional for any investment decisions. So why don't we get started? So many of you probably don't know what alternative data is. So let me just give you out the definition first. So if you look at financial data, for example, earnings, revenue, you have a lot of historical data like price of a stock. Those are called financial data. And many of the investors have used traditionally financial data only for their investing purposes. But this concept, alternative data, came about because many people thought that it would add value for investing decisions. Any data sets that are not part of or that are not classified as financial data is called alternative data. And I'm going to walk you through examples of alternative data on today's show. So why don't we just do that right now? Because there were a lot of discussions about alternative data, and hedge fund managers and quant managers attending the conference as a panel, they discussed what alternative data are trending up and also what alternative data are using for their investment decisions. And that was a really interesting discussion that I want to bring up on today's show. The first thing that I want to mention is there was this guy doing his investment in fixed income space, and he said that he can use local data in order to understand the election outcome. So election is very, very important for sovereign debt investment purposes. And as you saw from Argentina's case, if the regime changes, then it may have a huge impact on the bond price and sovereign bond price. So it's quite important to know in advance who's going to be elected. And traditionally, we have looked at only polls result, right? That's what happened. But he said that he can look at local data directly and then try to understand how the poll results would come out next time. Because depending on the poll's result, the bond price is going to fluctuate quite a lot. So this hedge fund manager was trying to understand how the results would come out in the near future and how it's going to impact the bond price, especially the sovereign bonds price. So I thought that was quite interesting. The second example that I want to give out is news analytics. So a lot of these hedge fund managers are trying to use news article information in order to understand the sentiment in the market. So for example, if there are a lot of news articles that are negative coming out for a specific firm, then the sentiment is going to be negative and it's going to have negative impact on the stock price. How do they do that? So there's a machine learning technique called natural language processing. What it does is that machine goes to new articles, whatever it comes out, and then try to parse all the text into small pieces and try to understand how many negative words and how many positive words are there related to this company. And it actually does really smart job in terms of scoring all these negative sentiments with respect to different companies, and very fast, because human beings cannot read all this text very fast, but in a matter of seconds, machines can analyze all this bunch of articles, thousands or millions of articles, and it can tell you whether the sentiment as relates to that specific company is high or low, like positive or negative. And many of these companies can use this sentiment in order to understand where the market is heading with respect to this company. And it could be used for fixed income. It could be used for equity purposes. And they get the signals from the news and they do the investment. So that's another use case for alternative data. And actually, there are a couple of use cases that I want to discuss here. The other one is the location data. This is also a fascinating field because how do hedge funds get location information from third-party vendors? So they can either buy satellite image or they can buy location information based on cell phone usage. So for example, everyone nowadays has a cell phone, and wherever they go, sometimes they give permission to cell phone companies to track their location. So this location data of millions of people will be anonymized first by this third-party vendor, and then this data set is going to be sold to hedge fund managers. And how do they use it? They can actually know exactly where you are in a given time. And this is quite, dangerous. I know that this data is anonymized, but if they reverse engineer, they can actually know where you're going, heading to, and at night you go back home and they know exactly where you live. So it's like kind of at the borderline between privacy and the usage of this data. Anyway, so let me just walk you through how hedge fund managers or quant managers are using location data. Let's say you're a hedge fund manager. You're trying to estimate how much revenue Home Depot is going to make next quarter. Then what you can do is you can just identify all the Home Depot locations within the United States. And you get all this cell phone location data. So you know how many people are currently in each of Home Depot merchant location, and try to compare that the number of people there against last year. Or you can look at the trend, and you can look at the demand of this Home Depot location at any given moment. So that's quite fascinating. And what's more quite fascinating, also seems scary, is that they know exactly where you are within that Home Depot location. For example, if you are lining up at the cash register because there's a long line, you just stand there and try to, pay whatever products that you purchase from Home Depot. They know exactly this cell phone location is going to give you exactly where you are within that Home Depot location. And hedge fund managers and quant managers should be able to know that you are standing in line. Then if you use this location information in a smart way and use machine learning, artificial intelligence, and big data techniques, you might be able to derive how much revenue the company is going to make over the next one quarter in advance of earnings call. And also you can use the hedge fund managers can use satellite image to check the number of cars parking in the parking lot. This is basically the same information like the hedge fund managers and quant managers are trying to understand the demand of this specific company. As you can see, there are just various ways hedge fund managers can use alternative data, and that's what they are using right now. Another example that I want to give to you is credit card transaction data. And one of the hedge fund managers there mentioned this one during the conference, and she said that, okay, I can buy credit card transaction data and try to predict and estimate the top line revenue for the companies. And also, she can estimate the shopping behavior of customers and so on. So I think I don't know. This is really not maybe fair for retail investors because retail investors do not have all this data. But that's what's happening. I'm just, giving out the fact so that you guys know how things work. Another example that I can give to you is some hedge fund manager and quant managers are using the screenshot of traders to understand where the market is heading within that given moment. So for example, if you look at the machine learning space, there is a technique that analyzes the images of different pictures. And if you can get the screenshots of traders' computer monitor, and you get that, let's say, thousands of traders all the time, then you know where they're focusing on right now. You know which screen they're looking at, and you should be able to understand how the market is going to move in the next 1 hour and so on. This is more short-term oriented trading, but that's also something that these hedge fund managers are trying to look at to gain advantage over other people. So I talked about many use cases here. I think that it's very interesting field and fascinating field for a lot of institutional investors, but not necessarily retail investors. The reason is that these data sets are very expensive, so I don't think that retail investors can afford to buy these data sets. But number two, even if the data sets are available for free for anyone to use online, the problem is you need specific techniques, AI, machine learning, and big data techniques in order to gain any business insight out of these data sets. I don't think that many retail investors are equipped with those skill sets. So there's a huge gap between retail investors and institutional investors on this front. But if you're retail investors, just be aware of the gap between you and retail institutional investors. And if you are institutional investors, and if everything is legal, right now a lot of things are legal, and a lot of politicians are trying to put some more, control and compliance in this space. So if you're retail institutional investors, I think you should be also aware of these trends so that you build your systems and you buy this data right now and build all these different machine learning models. But later on, it may not be legal to have that system. So you have to be cognizant of the fact that things are changing and there's going to be more political pressure on the system. So it's better to stay safe because it's going to be very costly to source this type of data and then change later. So I thought that this is an interesting topic, so that's what I'm talking about. But there are challenges. Like I mentioned, a lot of these use cases that are very interesting and that are trending. But if you are, let's say, institutional investor, there's going to be probably thousands of vendors knocking on your door, trying to sell the data sets. But even if you have these data sets, and even if you have machine learning, artificial intelligence, and big data techniques, it may be really hard to find signals from this data. That's what I also want to talk about, because in many cases, the data sets are very, very messy. You need to go through data processing, cleaning process, and also you need to know which data is reliable and which data is not. And it's going to be very costly for institutional investors to perform that type of exercise. If you're successful, then definitely you're going to get advantage. But if you're not successful, then it's basically simply wasting of money. So those are the things that I wanted to discuss. And let me just talk about that a little bit more, because in order to be successful in this area, you need to have the right data sets if you're an institutional investor, and you need to have the right team with mix of talent and a mix of skill sets, because you don't just want to have the data scientists, or you don't just want to have business analysts. You need to have someone who has both skill sets to make sense of what's going on, because data scientists are probably capable of understanding data, but if they don't know anything about financial industry investing, then there's going to be disconnect between data science and hedge fund managers and so on. And that actually has been the case. There has been always disconnect between fundamental managers and data scientists. Anyway, so those are the things that I wanted to cover on today's show. I hope that you found this episode interesting. And I talked to a lot of these hedge fund managers and quant managers at the conference, and how they use AI and machine learning. These are two buzzwords that you probably will hear a lot on news. And why not just educate yourself, right? So I'm right now right in that area professionally, so I was able to pick up a lot of things quite quickly. So it's just good for me, and it's just fun exercise. And after that conference, I came back home, and I was able to get connected to a lot of people through LinkedIn. And also I was able to get a lot of fresh ideas there. So I'll try to put them to work once I go back to work later. And it's going to be just fascinating. Let me just talk a little bit about the topic that I discussed at the conference. My topic was, as I mentioned, how people can develop machine learning models to forecast time series data. So when I say time series data, anything you measure the same thing over time is called time series data. For example, stock price is obviously one that could be classified as time series data. And also unemployment rate over time. Whenever you have timestamp, you can just call it time series data. And the topic that I discussed is how you can use machine learning models like GBM, KNN. I don't think you guys know all these technical details, but these are quite fascinating fields that are on the rise over the last 5 years. And I also learned quite a bit about other models, so I'm excited to learn all these things and try to implement at work. I mean, this is just fascinating field. Anyway, I'm not going to get into the details because this is not for non-technical audience, but I just wanted to tell my skill sets and passion and how they can be connected to investing. And I think it's going to be very fascinating field for a lot of people. So if you know how to connect these two completely separate fields, finance, investing versus machine learning, artificial intelligence, big data, then I'm trying to bridge the gap between these two. And there are a lot of institutional investors who are trying to do the same thing. Okay, that's it for today's show. Thanks for listening. So before I end, I just wanted you to do me a favor by going to iTunes or whatever platform you listen to this podcast and leave a rating or review if you find this podcast useful and interesting. And that's just a small favor you can do for me. Thank you very much, and see you next time.